Start of a new week, traders, and it's a boring one, isn't it? We've got the President's Day today, so I don't anticipate there much being um, going on, much to do today. So I thought I'd use this opportunity to showcase the Trend Predator and explain how I go about creating my watch list in anticipation of explosive move. As you can hear there in the background, I've got the Trend Predator already kicking out setups, alarms going off. We'll have a look at that now. So we've got an alarm here set up in the Trend Predator. It will give you the setups as and when they appear, depending on your watch list. And that's certainly helpful when it comes to trying to keep an eye on everything, on all the movements that might be going on. But nevertheless, coming into my trading window at 10 a.m., I've already got a good idea of what I'm going to be interested in. But obviously, this can all turn around on the flip of a dime in terms of whether I'm going to be going long, short, or doing anything at all, depending on the market fluctuations. So um, let's get into it. What do we have here that's being flashed? We've got the S&P, we've got dollar Swiss, NAS, S&P, oil. Okay, we've got setups in those. Um, what we'll do is we'll have a look at those in a moment. I'm quite interested in gold as well. And I say that because of that red day signal. Now, I don't know, for those that are going to be watching this video, whether you're already applying the Trend Predator, whether you've come through my coaching, whether you're a student or not. But regardless of where you are, what I suggest doing is sticking with my analysis on a daily basis, setting up your charts as I've got them set up. Those are the indicators that I use. Sorry, wrong template. These are the indicators that I use. Screenshot those. There's plenty of education around those in various videos within my channel, both on Discord and in YouTube. But reach out to me. I mean, I can just give you a copy of my chart. Okay, that's how I've got it all set up. I just make a copy and send it over to you. No, copy link. And what I'll do is I'll stick it in the description of this video. I'll remind myself to do that at the end of this video. In any case, the steps that I would take to learning the way that I trade in the meantime would be to check out Stacey Burke's YouTube channel, Stacey Burke Trading. The Trend Predator indicator has been born out of Stacey Burke's teachings. It's been an effort on my part and, for the most part, my colleague and mentor, TC888. I'd go and check out his video as well, but we essentially collaborated on this project together last year when I suggested to him it would be a good idea to put together an indicator for the approach. And it's coming to fruition, and it's currently in a beta test. It's not quite there yet 100%, but it's certainly got enough setups programmed into the indicator which are now being alerted to us by an alarm. As you can see here, we're already being alerted today by the S&P, dollar Swiss, NAS, and oil. Setups are already underway, despite it being a holiday, US President's Day. And to check out his YouTube channel, TC888, you've got some great educational material for free there, certainly to keep you going. if you are applying this indicator, then this is the way that I approach each day. I have a 10 a.m. trading window, very strict with that. And I don't want to be taking trades until 10 a.m. Reason being is because all of this at the start of the day, you've got Asia as an 8-hour box, you've got London as an 8-hour box, or Europe. And this essentially is setting me up for a trade opportunity in New York. Okay. And what I want to see during Wall Street is what they are doing. Are they taking traders up high? Are they pulling them down low? Where is the trap? So initially, as you can see, you've got traders trying to go long here. Okay. And we've had a fake out high of the prior 4-hour box. All right. So that's good. Right. So we've got that fake out high in play currently. And what I'm in anticipation of is when I come into the market is I'm looking for exactly that. Okay, I've got certain criteria in order to get into a trade once it's signaled by the trend predator. So far, we don't have any setups at the moment. Okay, there's no setup to be trading, but the table is already telling me that we've got a first red day, which was on Friday. So Friday put in a secondary high on the week and then sold off aggressively. And you'd been in anticipation of a continuation of that. So you've got this dump, pump, and dump scenario, impulse, correction, impulse. I call it an ICI setup. Um, that's something I picked up from, what was the name of the guy? Transparent FX, I think it was Transparent FX. Um, impulse, correction, continuation. It's just terminology, but it's neither here nor there. And considering that markets do one of three things, something I picked up from Stacey Burke, they break out. So we broke out of previous month's high, break out, and they pull back. And they either continue, fail, or move into a trading range. But that's what markets do. They break out of levels, and they will pull back eventually, depending on how much commitment there is to the breakout for when that will return. But in this case, as you can see, we've got 3 weeks. Okay, 3L, 3 weeks of longs in a row. So last week, the week before, and the week prior. Okay, so 1, 2, 3. I mean, it's much more than that when you want to count back, but this indicator will signify to the last 3 consecutive breakouts. And that's enough for us to be in anticipation of a pullback. Doesn't guarantee anything, of course, and you don't have to see a pullback after 3 weeks of rise, but it's giving us signs that this market could be about to decelerate. So it's a strong bullish trend. I mean, the monthly chart, as you can see, is bullish. Okay. In fact, the monthly chart gave us a first green month last month, which signifies a continuation this month. So that's exactly what we've seen already. February continued the January rise. You can go back and look at your charts, but you can see that January was a first green month after a series of negative months. Okay. All right. So January was an explosive month, and then February was anticipated to continue with that explosive month, being a first green month. And that's exactly what we've seen. So all these things we're accumulating as a constellation of factors, momentum, and trend within the market to derive at a thesis for a day trade. So we're using multiple time frames, monthly, weekly, daily, to derive a bias for the day and session. And the session, my window, as I said, is from 10 a.m. That's in anticipation of there being the highest volumes being transacted, because you've got the bond market involved, you've got currency markets involved, you've got the big players, commercials trading on the desks of the banks, right? Orders going through, and the equity market open as well. So that's where you expect to see the parabolic trade setup opportunities. And I say setup because what we're looking for are setups, not just trying to catch a market going up or down, putting our finger in the air and um, guessing or estimating what's going to happen. Yes, we've got some anticipation of what may come about, but it's due to typical cycles on a weekly, daily, session by session basis. And when you look at this, you see these cycles play out over and over again. So Monday typically can be a narrow range day, not always. It can quite easily blow off in the direction of whatever, however Friday closed. And that's what I'm in anticipation of today. So Friday blew off. We've got the pullback, and as I said earlier in the video, I'm looking for that continuation. To see that continuation, I need to see certain um, price action in play. And in this instance, this is a 15-minute chart. I'm looking for Wall Street to put in a high and low, which we've got, okay, and that sets our boundary, if you like, for the current window of opportunity, as it were. Right, so that's a box that it's created, okay, that's Wall Street there. The open, the first 30 minutes, opening at 9:30. Okay, so 9:30 it opened, and then at 10 a.m. it closed. Right, that box. So if we put it to a 5-minute chart, it'll be clearer. There we are. Okay, high and low of the open of Wall Street, the first 30 minutes. And then what I'm looking for is to see how the price reacts in the next window, the new hour, 10 a.m., whether or not the price takes out the high, takes out the low. Are we staying inside? At the moment, we're staying inside. So while we're inside, I don't want to be doing anything. It can go either way. What I'm trying to trade are breakouts. I want the market to show its hand and then catch the move that could be directional for a significant period of time for me to ride the trade and the momentum within the trend that's being formed or already informed. So in this sense, we've already got a trend which is bearish. But that depends now on the highs and lows of previous days. So as you can see, looking left, this was Friday's range, high and low, and then the range before that had a high and low. And as you can see, that low is significant. That low, for me, is going to be pinnacle as to whether or not, pinnacle, whether or not we're going to be bearish above, bearish below, bullish above, bearish below. So bearish below is what I'm looking for. All right, but at the moment, it's pumping. Okay, it's breaking back above that low. So I don't want to be selling if we're above that low, because what can quite easily happen is the market can continue to rise while above that low. All right, so at the moment, paint that a different color, make that green for support. Right, green for support. So while we're above that level, I assume that it acts as support, and I assume that we're going to come up and retest the highs of the previous 4 hours, or the Wall Street high, as it were. And then if we break there, we can be breaking above Asia's highs and even London's highs. And that could leave us to continue pressuring those that sold on Friday. You've got the breakout of the Wall Street open box. As you can see, this is why I put an emphasis on that box. So there's the Wall Street high and low from Friday. And look how the price behaves. So when we came out of that box at 10 a.m., we stayed out. So that's what I'm looking for. I'm looking today for that scenario to be trading that breakout. And that could have been a lovely one and done trade, stop above the lows of New York in line with the bearish trend on the 5-minute chart below the 20 EMA, just holding on to that until perhaps it crosses back above it. All right, and that would have been a fantastic trade at the end of the week, back end of the week, right? Piling into all of what was built earlier on in the week for a stop hunt, right back into the value area low of that week and into that low or secondary low of that week. Right, so that's the sort of stuff that we're looking for. But on a Monday, you're not as likely to see something like that, but you could see the continuation thereof. Okay, so anyhow, so we're monitoring this price to see how it behaves at the level, at that low of the previous day, Thursday. Previous day, previous day, Thursday. Seeing how the price behaves around that. As you can see, it's getting rejected again, which is nice, in line with our thesis that this is going to continue lower. There's the momentum, there's the correction, there's the stop hunt into that correction, taking traders falsely lower again in anticipation, of an early sell-off, only to pull back on them. That's the trap for the London session. And then we're coming up, trapping traders going long, breaking out of Asia. You'll have breakout traders trying to go long, trapped again, coiling. Coils tend to lead to a breakout, and a coil could be measured. So even that 4-hour box could be measured to the downside. Okay, taking us into the weekly breakout level. Look how well that lines up. Don't know if that's by coincidence or what have you, but that's the previous week's breakout level. Okay, so that would in itself be regarded as support. If you get a trade out of that, then great. Just be cautious of that level. Shorting on the breakout, perhaps. Stop above the daily breakout level, perhaps. However you want to manage your risk, your trades. Always using a stop loss. And that could be our setup for the day. So if it comes down and shows us that it's losing the previous day's high that we talked about, Thursday's low, sorry, not high, Thursday's low, right? So it's doing a nice counter bar fake out high there, 10 a.m. Okay, bit of a pullback into that. Great, fantastic. Okay, now we've got a trade here at 10:15 set up. I mean, you could take that inside the box. It's more of a risky setup because you're inside the box. This could easily come down, find support again, push back up, and it could just range all day long. You don't want to be in that. You want to be looking for the explosive moves out of that box. So I'd be inclined, even though I could get a better risk to reward on that trade, or I could even have the stop above the high of the day, still get a 2.5. That's the high of the current day I'm talking about, the 4-hour box. I mean, that in itself is quite a nice looking setup. I'd want to see that low being lost, first of all, to be fair. Anyway, I don't quite get a 3-to-1. I want a 3-to-1 at least. So I'd bring it down and just have it below the peak formation high. It could come up and stop you out, but okay. So, but being more safer, conservative is the word I want to use. I'd have that pulled down, as I said, below that breakout level, daily breakout level, catching it on the breakout. I get a 3-to-1 still, somewhat more conservative because it's Monday. If we get outside of the equities box, then I'd anticipate it continuing down into the rally from London. Okay, so that's thesis one. Thesis two would be that we do a range expansion of the London box. So that's our target one is weekly breakout level. Target two would be a range expansion of the London box. So if we pull that down, we'd have to get through the closing price. We'd have to break yesterday's lows. So as you can see, there's far more support on the way there. A lot of levels we need to get through. But this takes us down to a nice round level number 2870. And what that in fact also is a Fibonacci level. If we measure the high of the correction to the low of that impulse, so the low of the correction to the high, it tallies up pretty spot on with a minus 272. I mean, depending on your broker, where these levels actually are at your broker, but it's not the number that matters, but the range. So comes in at 2869, near enough 2870. Okay, if we do an exact range expansion of that box, so I do the high of London, if I can get it on there. There it is. To the low of London. No, not quite. Come on, there. As you can see, a 100% range expansion. So we get rid of the Fibonacci for the moment. Oh, that's done that wrong, sorry. Does that get rid of it? Yeah. So there you go. The 100% range expansion of that session comes in pretty much bang on 2869 again. So that could be a nice target, confluence level. Okay, so pulling that down further. Again, it's the US President's holiday day today. I'm not sure if we're going to get any movement at all. So in that case, what you might want to do is be more conservative and say, well, look, if this is going to be choppy today, then I might want to get that stop above the high of the day or as close as I can. There you go. There's a fake out high level. Asia, so above the Asian high, pretty much at the high of the day, that is. Okay, look, there's that move back up we were talking about earlier that can come off. So if we got into that trade, we'd already have been in drawdown. So that's why I'm waiting to be outside of that box. Okay, I want to trade outside of the box so that I'm not involved in this choppiness sideways price action. around that daily level. Or if I am going to take that trade, then I want my stop outside of the box on the other side, for instance. Again, all depending on how you want to manage your risk. But we never got a break of that low, did we? So we wouldn't have been in that anyway. Okay. So that's a very conservative approach in anticipation of a breakout, and then just choppiness, but eventually maybe drifting low on the day. Or a more aggressive approach would be above the equities highs or just inside of that, around the four-hour high. But as I said before, we want it above the daily because I'm going to be more aggressive. And target one being the weekly breakout level below the London lows. Taking some money off potentially here, and moving to break even and being done for the day if you get stopped out, and having paid yourself for that analysis. Okay, so I thought that would be helpful in terms of how I'm using this indicator. We've also combining it with using this TrendPredator fake out highlight indicator. This is the way I've got it set up for day trading. I'm not looking at the breakout bars for day trading. That would be for, well, I would be, but not until the end of the week. So at the end of the week, Wednesday, Thursday, Friday, I'm looking to see if the market's in breakout. So if we've got days that have broken out, and we close in breakouts, so like for instance on Friday we broke out of the previous day. Okay, there was the low, so we broke out and we closed in breakouts. If that occurred at the end of the week, it would, and around the highs of the month, which it did, then quite often you can see extensive moves, which is essentially what we got on Friday, because it closed in breakout. There was the peak formation low. Thursday closed in breakout, and because it was towards the highs of the month, that's triggering higher time frame traders that would be involved in that reversal trade. Hence why it just ran all the way through towards the end of the day in the same direction, and that would have been a beautiful entry, breaking below the Asian lows for a colossal move to the downside, especially when we got outside of the Wall Street low. What more can I talk? Oh yeah, so we were talking about this fake out indicator. So I've got it color coded as this. So ideally for a short, I'd be looking for one of these black bars, accompanied with one of these switch bars, red, or a mixture of the two, or I mean, one of the other would be fine. As we can see here, let's look what we've got going on. We've got these switch bars. That red switch bar was a fake out high. It broke below the closed and broke inside of that previous bar, which is essentially showing that it's switching momentum. Right, we've got the same here happening now. This was a switch bar to the upside. This is a switch bar to the downside. This is what we want to see. We're getting bearish switches dominating. Bears are dominating within this box. That's bearish. Okay, or back below that level. Okay, so that's bearish. Just want to check something here. If the indicator would have picked up on a fake out high on the Asia. Fake out high Asia. Yeah. Oh no, hold on. What I'm wondering is whether the indicator is concerned about this weekly breakout level, I presume. Yeah, it's only picking up on uptrend opportunities, which I'm surprised it's not picking up on downtrend opportunity, because we've had that fake out high. Anyway, that's something I'm going to take up with my colleague. I wonder if that shouldn't be a bearish setup that's not been coded into the indicator as of yet. Okay. So what we'll do now is we'll switch over to some of these setups that have been flashing, and we'll put an alarm on a breakout of, let's going to be conservative, and I want to see a break of the 4-hour bar and a push back up to retest the equities open, would be my thesis for today for the short. Just as choppy as it is, and being a holiday day, don't want to take the breakout on the assumption that it's just going to sell off aggressively, because I don't know there's any volume for it to do that. Let's go over to, okay, to put an alarm on that, just put crossing. And let's go over to look at some of these alarms that have gone off. So we'll look at the latest one, shall we? Look at dollar CAN, we'll work our way down. Or no, we'll start from the bottom up that was signaled first of all. So go to oil first of all then. So oil over here. The indicator is telling us that we've got a setup here. So the setup was flashed. It's a reversal continuation into an uptrend. There was a fake out low on the daily chart. It is mixed because why is it mixed? Because we had a fake out high on Friday. Okay, and also the monthly chart is bearish. Let's have a look at that. So as you can see, the price is in a bullish day, but Friday was a bearish day. So fake out high. So it rallied on Friday and then came back inside of Thursday's highs. So fake out high. And then today we broke down below Friday's low, and then we've pumped up. It's a fake out low. So it's a bit mixed. but the overall trend is bearish due to the monthly situation below the previous month's low. PML, previous month's low. So obviously that's January's low that was put in way over here somewhere. Okay. Start of the month. All right. So January rallied, put in a high, peak formation high, which was confirmed when we broke below January. Okay. So it's a situation where we're trying to move up into a downtrend. We've got 3 weeks, consecutive weeks of breaking down. So counting back. So this week, have we broken last week's low? I suspect that we have, yet. So that's this week. We've put in a fresh low. Last week was the lowest low of the trend and so forth. So 1, 2, 3. We're above that low from week commencing 3rd of Feb, start of the month's range. So we're back inside of the lows of the month so far. And the indicator is explaining to us that we broke above Friday's lows, did that in Asia, came back down to retest them, held as support, took them out slightly here. That's probably where the momentum's come from. Trapping traders going short, squeezing them up. And we have broken above the highs of Asia. All right, so we've got everything bullish up until the monthly chart. Everything is looking bullish. And we did that, dropped, we pumped, we got this nice Wall Street range with a fake out low for the pump up out of that. So the breakout was a nice entry to have gone long. Okay, targeting the highs of the day, for instance. I've got a naked point of control from Friday to target. So Friday selling off, Monday squeezing back into those positions. Above the lows from Friday and last week. Bullish. 3 weeks of selling and the price is squeezing back into all of that money. Okay, so that's oil. Could be looking to go long, depending on how this bar closes. But if we close above that level, could be bullish for the continuation. That there was a fake out high that failed, so a failed breakdown so far. Price closed back above the Wall Street highs, as you can see. So it's contained between the high and the high of Wall Street. And now we've got this aggressive bullish momentum bar pushing higher. So we've got 30 seconds or so until the close of this bar. Go long. Stop below the breakout bar perhaps, which is also the 8-hour breakout, so the Asian high, so stop below there, targeting the point control from last week, Friday, sorry. Got the previous month's low as well. Perhaps we're coming back into that. So there's the bar that's closed. Did it close outside? Let's have a look. Not quite. So not taking that. Maybe on the rollover. It might be an 11 a.m. setup perhaps. Still wants to faff around in the breakout area, but this could impulse out and you might want to catch it on the way through. You could be more aggressive with your stop loss below the Wall Street highs and that fake out bar that failed so far. Get a wide spread on oil, so I want to be more conservative, to be fair. Sterling, by the looks of things, dollar Swiss. Alarm on that for continuation setup. Let's have a look at oil. We can look at the S&P, see what's going on with that. S&P over here. Reversal continuation into a downtrend. Okay, so that's since. Okay, let's see, so we get rid of that. It's an old signal. Let's look at NAS first. So NAS is not showing anything anymore. So it was showing what? An uptrend setup. Reversal continuation low hanging fruit. So it's probably something that's already gone. So what we're saying, it was an uptrend setup. Reversal continuation low hanging fruit. If anything, that's bearish, isn't it? Uptrend setup, reversal low hanging fruit, counter direction. Yeah, so that's a. Okay, so it's talking about being, the context is uptrend, but it's reversing the uptrend. So it's continuation of that. So basically breaking below Friday's highs, coming out of the London lows. But be cautious because that's an inside box, which could see the price come back up and take stops above it. But nevertheless, we've got this dump, pump, and prospects of a continuation to the downside, but we need to be below the 8-hour box. Okay, so that's the Wall Street trap, taking traders short, squeezing them back up. That's the box. We want to be trading outside of that box. It is a bearish box. Okay, for the rollover. So I'd be inclined to, depending on how the price is behaving, but take that from the closing price in anticipation of a break below the box, or simply take it on the breakdown of the box in the low of Asia for the low-hanging fruit trade to the downside. Squeezing Friday's longs all the way back down to the monthly breakout levels. We broke out of that month, breakout, pullback. You've got Friday's value area low as a potential support, as well as the naked point of control, Thursday's highs. So all of those to look out for. Stop above the Wall Street highs, perhaps, into the value area low, if not down to the level. The breakout level. Or if taking below here, then you're going to be more conservative with your stop loss. Concerned about the value area high as well. It's a bit risky, not ideal, or very risky, I'd say, with that value area high as a support area. Volume profile. If it gets accepted within that value area, then you'd anticipate it being resistance. For a continuation to the other side of the value area, watching out for that peak formation support, although prospects of taking out that support and into where it rallied. Okay, we can look at dollar Swiss next. I don't have it on this board, so we'll have to use, let's use silver. Right, so what is it telling us? Conflicting. If it's conflicting, I'm not really interested, but conflicting set at previous breakdown, continuation high of day. Oh, excuse me. Right, so breakdown Friday is pumped up. How many levels? 4L, which is nice. 3 levels of 4-hour rises. And we're breaking below the previous 4H, which is bearish. There's the Wall Street box. There's nothing really standing out to me that makes me want to sell that. Didn't get a fake out high or anything around the Wall Street open. If anything, it was a fake out low. Trapping traders going short for the pump. So not ideal. We need that to be giving us a fake out high to want to go short. So we're looking for a black or red candle over the next few candles with anticipation of a sell-off to the closing price. Stops below London's lows. If not all the way down in a continuation of the trend. So nothing really to do on that at the moment. Look at sterling dollar. Sterling dollar, TrendPredator Pro is telling us that it was an uptrend setup, previous breakouts. So the breakout of Thursday's highs, continuation trade to the upside. That was when we were breaking the Asian box. No, when was that triggered? 9:30. Yeah, so there it is, breaking out of the 8-hour box from Asia, the high there, and that's leading to a pump. Everything is bullish apart from being 3 days long bearish within it, but nevertheless it's a bullish market still. It can still keep pumping up. That's what it's trying to do at the moment by the looks of things. Haven't really got anything here convinced. Well, in fact, you've got that fake out low, switch bar in equities hours. You've got the trap to the downside, pulling people back inside of that box, and then everything looking positive for a continuation trade coming into this new 11 hour. Now, we've got the highs from London that's coming up to take out. Would be cautious around there. It's a one-star setup, so not too convincing, but nonetheless a setup in play inside the value area above the closing price of yesterday, coiling for a continuation to the upside perhaps. Let's look at dollar CAD instead for the moment. Downtrend setup, previous breakdown continuation from the high of the day. So there's the breakdown. So really it needs to be below that level for the continuation to the downside, back inside the 8-hour Asian high, all of that trap volume up high, line of the sand, drop. Okay, that's about all I've got to show at the moment. Right, so looking at oil here, we've got fake out high, Wall Street high, fake out low, Wall Street high. So that is the recipe for a long, back inside above the 8-hour Asia box for a long. Let's have a look at sterling because that's also flashed. Sterling, let's have a look. Right, bullish, as you can see, bullish direction, trend, uptrend, previous breakout, continuation, low hanging fruit, one-star setup. Well, fake out low down here into the session, bullish. Fake out low again, bullish, bullish, bullish. It looks pretty bullish, all of that. So that in itself we could take. Let's have a go at that. Long. What are we targeting? Do we get a decent risk to reward? Not really, so not interested in this. This could easily rally up into the value area high and meet resistance. 5-minute chart, what does it look like? Again, not really ideal in terms of risk to reward. I mean, it's all looking very bullish, I have to say. Just with oil, you get. Sorry, this is sterling. Spread on sterling is not ideal on this broker either. Yeah, I'm not interested in this at the moment. Timing wise either. Sterling CAD is certainly better set up. So you've got bearish here. I mean, I'm not. Mixed picture on sterling at the moment. Okay, so I'd rather wait for 11:30. Oil, on the other hand, what's going on over here? Oil looks good. We talked about that, I think, just before I switched over to sterling. What would we be targeting? Naked point control. So this here was the 11:15 candle that opened. I'd wait to see how we get on at 11:30. If we get the breakout, fair value gap, path of least resistance looks to be to the upside. You've got the closing price, you've got yesterday's highs, you've got that fair value gap low, all of that there. Accumulative support, I would argue. Targeting this value gap on the way to the point of control. So oil, good, but not giving me what I wanted really, because there was too much space for that to come back into. And it's not enough R, because that market can easily come back down, retest the gaps that it left behind. As you can see, plenty of gaps on the downside. And stop below the 8.